Janel, have you ever tried cocaine?
No. Have you?
I haven't either. But a VC once told me, and I quote, that the idea of cocaine addiction is quite similar to the decision that founders make when they decide to take capital from venture capitalists.
Wow.
Wow, indeed.
Today, we're going to talk about something kind of awkward, especially because we're a VC. Why taking money from a VC is sometimes not aligned with your interests. Welcome to Uncapped Notes. I'm Janel Spilker, Head of Business Development and Partnerships at Hustle Fund.
And I'm Eric, one of the co-founders at Hustle Fund, and also a VC trying really hard to be aligned with founder interests. All right, Janel, so we had a really fun time writing this episode, and we identified that there may be three major misalignments between VCs and founders, and they are the pressure for unnecessary growth, the loss of control and independence, and lastly, falling out of favor. Why don't we dive into these things?
First, pressure for unnecessary growth. Can you explain more?
So you take money from a venture capital firm as a founder, Janel, and the expectation is going to be very high that you're going to hit revenue metrics, customer acquisition metrics, as well as fundraising metrics that are super aggressive. A lot of times VCs want to see founders raising every 6 to 12 months. And that is a crazy pace because that means that you're going to be burning lots of capital, making tons of investments and so forth. But we like this as an industry because when you raise more capital at higher and higher valuations, it makes us look good to our LPs, our limited partners who want to see that kind of high growth potential as well. And with that kind of story, a venture capitalist can also raise more funds to say that we are good investors, we're picking really fast growth companies, give me more of your dollars, and also give me more of your fees. And I think this is a really awkward kind of social contract that isn't discussed enough between the VC and the founders. So that's where the unnecessary growth pressure tends to arise from. And there's also this other trade-off too here, Janel, which I think is a misalignment, which is this loss of control and independence. Do you want to talk a little bit about that?
So sometimes I talk to founders who are bootstrapped, right?
Yeah.
From day one, they've been able to keep control of their company. They get to make the decisions. If you take on capital from a VC, you are diluting your ownership of the company. You're giving up some decision power. And a few different things can happen when you do this. And so it's something to take into consideration. It can sometimes create tension. We talked about pressure for growth, right? There can be pressure for growth that can create tension on a founding team. As you are used to making all the decisions for your company and you have to give up some of that decision-making power, that can lead to tension between your investors or your board and the founding team.
Absolutely. Tons of tension. And in addition to that too, let's take this all the way through. Let's say that we have founder Janel, we give you a bunch of capital, we invest in like 5, 7 different kinds of rounds, really, really late stage at this point. That dilution and that loss of ownership can get pretty substantial. I've seen companies where the founders who started with 90% of the business end up with just 2% of the business at the point of their IPO. And maybe they make, a decent amount of money, but I actually would argue that in a lot of cases, given the economic output that they get from their IPO and the amount of time and effort that they put behind their business, they might have been just better off being like a product manager at Google or Facebook and doing that kind of career to make as much money or possibly even more. So these situations can happen, and that bootstrapper mentality of having complete ownership over your timeline, I think really matters, as well as complete ownership over your business for the decisions that you can make too.
So the third way that we've identified is falling out of favor with a VC.
Falling out of favor is a real thing. So let's say that we are venture capitalist Janel, and then it's becoming more and more clear to us that we're losing conviction that this is going to be one of those portfolio companies that's going to skyrocket into infinity. The moment that a VC feels this is when you start to notice that the responses start to drop. The help is definitely not there anymore. It feels like you're kind of in your own island again. As crappy as this is, it happens quite a bit. Now, I'm going to be really clear. At Hustle Fund, we have a very different kind of social dynamic for how we serve founders, and we don't want to be one of those VCs that's just hot and cold, hot and cold. But you tend to find this especially at the later stages. If things are kind of moving slowly, VCs are quick to use terms like, oh, this is a zombie business, or it's going to be a slow death. these kinds of terms as well.
Real nice.
Really not nice at all, exactly. And this actually is the nature for how VC portfolios are constructed. At the end of the day, you raise all this money and then you're going to pour it across a basket of companies, but it's really going to be a handful of the businesses, 2 or 3, that end up pulling up the value of the entire portfolio. So you can see that there's an incentive for the VCs to pour all their resources behind the ones that seem to be winning. And for the ones that don't seem to be obviously winning at that point, or maybe on that slow death or zombie kind of path, why waste your resources behind it? And this is where a lot of distaste is left often with founders towards their VCs. And it's really unfair, and I've been on the bad end of this before as a founder too, and it totally sucks. All right, Janelle, so we sort of identified these 3 reasons why there could be misalignment with the founders and the VCs: this pressure for growth, the loss of control, and falling out of favor. And to be really clear here to our listeners on Uncapped Notes today, this was actually one of the big reasons why we wanted to create this fund at Hustle Fund, because we were upset at being at the receiving end of all this crappiness and wanted to create a fund that could be very founder favorable, where we can mitigate a lot of these misalignments, think much more long-term in the relationship. And that is how our fund works. So I will just caution this one last thing. VC is a very serious decision to take when you take on that capital. You can't just take the money when it's in front of you. You may want to find other alternative sources of capital first before you take on venture capital, even working with someone like angels, which tend to be a lot more founder friendly and long-term thinking too. There are cases as well where taking VC money really does make sense. If you're on that high growth trajectory, you have that kind of ambition, you need that capital to put it to work that you specifically know is going to produce, then yeah. But I hope, Janelle, that our viewers are a little bit more eyes wide open about these decisions to take that money.
Glad you brought that up, Eric. We just recorded an episode on taking money from VCs versus angels. So if you want to dive in, check out that episode. We'll post a link. And thanks as always for watching Uncapped Notes.